Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Chinese stocks rally, leading gains in Asia after Beijing's leadership makes its strongest pledge in years to boost economic growth. Exports from China surge ahead of new tariffs from the Trump administration. Police charge Luigi Mangione with murder for the fatal shooting of UnitedHealth executive Brian Thompson. The 26-year-old arrested in Pennsylvania after a 5-day manhunt. The Syrian rebel group that toppled President Bashar al-Assad is reported to be forming a transitional government. Israel steps up attacks on military sites in Syria. Plus, we will be live at the inaugural Bloomberg Women, Money and Power event today, speaking to the most influential female voices in finance from around the world. Good morning, happy Tuesday. So despite the positivity that's filtering across Asian markets, European futures are currently pointing to losses, looking to snap 8 straight days of gains for European stocks. US markets closed a little lower yesterday as well, with the S&P down around 0.6 and the Nasdaq 100 off by about 0.8 by the end of the close. European futures then pointing lower by 0.5%. The FTSE 100 futures pointing lower by 0.5%, and the S&P futures looking to drop about 0.1% again after the losses of yesterday. Nasdaq 100 futures pointing lower by 24 points. Let's flip the board and look cross-asset. Building up, of course, the inflation data out of the US on Wednesday. Then you have the ECB decision on Thursday. So CPI expected year-on-year actually to tick up to around 2.7%. The 10-year currently yielding 4.18. Markets still see a more than 80% chance that the Fed will cut again later this month. Euro-dollar at 105. Brent trading at 71.75, down 0.5%, factoring in the stimulus pledges of the Chinese government with, of course, the uncertainty that continues in the Middle East. Gold at 2,666 as China ramps up buying of the yellow metal. Gold up 0.2, close to 0.3% so far in the session. Let's check in on how markets are faring, particularly on China. Then some of the boldest language we heard out of Chinese leaders in years. Let's bring in Avril Hong in Singapore with those pledges. Avril, what are we seeing in terms of the equity market reaction to what we've been hearing from senior leadership in Beijing?
I mean, this is a key shift in tone, right? Moderately loose monetary policy, something we haven't heard since the GFC. So positive signals, optimism of stimulus, and Chinese stocks, bonds, currencies are gaining today. But you also get the sense that investors want to see beyond a shift in tone, actually translating into action, policy making. The CSI 300, the Hang Seng, gained 3% plus earlier in the session. Look at where they're sitting now. Flip the board. What this stimulus optimism is also helping is other markets in Asia, like the ones in South Korea, which, as you know, hasn't seen a positive day amid the political turmoil in the country. The Kospi is gaining 2+% today, not quite erasing the declines of the past couple of sessions. Also wanted to highlight what we're seeing in Taiwan. It is a bit of an outlier. It's feeling the drag from TSMC, which is, of course, a key supplier to Nvidia, which is in the crosshairs of China. We had separate data as well that showed TSMC sales, I think, climbing 34% on year for the month of November. So optimism surrounding China stimulus, that's really what's keeping markets in Asia mostly positive today. Tom.
Avril Hong in Singapore. Let's stay on the China story then, because as Avril was saying, Chinese stocks gaining today after Beijing's top leaders signalled bolder economic support next year ahead of Donald Trump's return to the White House. For more, let's bring in Bloomberg's James Mager, who's on the ground for us in Beijing. James, I certainly haven't remember hearing language or seeing language like this from senior leadership in China for years. This seems to be a significant pivot. It needs to be backed up by action, of course. What is your take in terms of what appears to be quite a marked tone shift from the Politburo?
I think the first thing to take away from this is it's happening now in December and not like the previous 2 years when we've seen stimulus, but it hasn't really happened until the fourth quarter, or, it's been announced at the end of September, and then finally October, November, they sort of start to dribble out some extra bond sales and, some extra spending. This is clearly setting up for the economy next year. We're going to have the Central Economic Work Conference possibly tomorrow, starting tomorrow, and that's going to set up the targets and goals for and the spending plans for 2025. And I think the significant thing is that, yes, there's been a massive tone shift in what the government is saying about monetary policy and also about fiscal policy, but also it's happening now, making clear that from the start of January next year, which is only in a couple of weeks, there's going to be a real push on stimulating the domestic economy and really getting domestic demand to start growing much more strongly than it has.
Forcefully lift consumption was a key line, wasn't it, that jumped out. What in terms of next steps are you and the team watching for then, James?
So as I said, we have the Central Economic Work Conference in the next few days. There'll be an announcement probably on Thursday afternoon about the general terms of what they've decided. And then we'll actually see the monetary or the policy targets released in March of next year. But I think, things like, how are they going to actually support consumption growth? Is there going to be real change to the social security system, better pension payments for people in rural China, sort of equalizing the gap between urban Chinese and rural Chinese and what they get from the pension system and the healthcare system? Attempts to help companies pay wages faster. These are the kind of things that I think are really going to be significant. You also might see local governments being given more money to buy housing, and that will obviously help the housing sector. But what's really driving, what's really keeping the economy sort of depressed at the moment is really lack of confidence from households, and also lack of confidence from businesses that if they invest, if they go out and buy, that's going to lead to further returns in the future. So more money in people's pockets, support for the housing market, and possibly if there is a promise of better social welfare over the long term, that should encourage people to spend more and save less.
James, some reporting, some suggestions, the deficit target to fund this next year may be raised to 4%, which my understanding, 4% of GDP, my understanding would be the highest, the widest gap since around 1994. What is your expectation in terms of the expansion potentially of that deficit target as officials look to fund maybe a looser and more fiscally stimulatory set of policies?
I think my reaction to that is finally, this is what people have been calling for a very long time. The IMF, the World Bank, and other people have been saying that China has the capacity to run a bigger deficit, and the central government has the fiscal capacity to spend more, to borrow more cheaply, and use that money to pay for things that the country needs. It's sort of, you're looking at the Chinese government, it's kind of like a fiscal government, like a fiscally repressive government like you see in Germany, where they have the debt brake, or it's kind of like Republicans in the US who don't want to borrow and don't want to spend. And yet everyone is calling for the central government to spend more to try and bring the economy out of the doldrums it's in right now. So if they do raise the deficit, whether it's 4%, if you look at the augmented target, it could be as high as 10%. Whatever that percentage of GDP is, the central government needs to borrow more and they need to spend more, because the provinces and the local governments don't have the capacity to do that anymore, and companies don't want to spend because they don't see possibilities of profits down the road. So really the only game left in town right now is the central government, Beijing, taking responsibility for getting the economy going.
James Baker, excellent. Thank you very much indeed on the ground for us in Beijing on this major tone shift and what to watch for in the days and weeks ahead. Switching focus, a suspect has been charged with the murder of UnitedHealth Group executive Brian Thompson. 26-year-old Luigi Mangione was arrested after a tip-off at a McDonald's restaurant in Pennsylvania. The state's governor, Josh Shapiro, says the suspect should be, quote, no hero to people frustrated with the American health insurance industry.
In a civil society, we are all less safe when ideologues engage in vigilante justice. In some dark corners, this killer is being hailed as a hero. Hear me on this. He is no hero.
For more, let's bring in Bloomberg's Bill Ferries. Bill, what is the latest then?
Well, we are learning a lot more as the hours go by about this chief suspect, Luigi Mangione, 26-year-old, as you mentioned. grew up attending an elite private school in Baltimore, attended the University of Pennsylvania, where he seems to have studied engineering and computer science. He even helped teach a course on artificial intelligence to a group of high school students in a summer program at Stanford University. As investigators pour through some of his social media accounts, they're learning a bit more, including that he at one point seemed to praise the writings of the Unabomber, Ted Kaczynski, who he said was rightly jailed, but had made some interesting points about where society was headed. On his Goodreads account, there were a lot of references to books about dealing with lower back pain and back health medical issues. It seems that's created some speculation about whether there may have been a medical issue in his own background that resulted in some bad or difficult exchanges with insurance companies. We just don't know that much about it. For now, he is facing charges in Pennsylvania of having a host of fake IDs and having a gun illegally. But the more serious charge just came down in the last couple hours in New York, where he'll face a murder charge there and is likely to be extradited from Pennsylvania to New York at some point over the coming week or so.
Bill, look, this murder has reverberated, hasn't it, across the nation and beyond, quite frankly. And Josh Shapiro, the governor of Pennsylvania, referenced the fact that some people in some dark corners, as he said, quoting the governor, kind of have celebrated this guy, or at least the suspect, whoever that is, ultimately. What do we know about why this has resonated with so many?
Yeah, I mean, Governor Shapiro talked about dark corners. It seems to be a lot more than that. I mean, people are being very public, at least on the internet, in terms of praising Mangione. There's a lot of frustration. There has been for years in the United States over access to health care and then the cost of health care, even if you have insurance plans. People sometimes feel like they pay very high monthly premiums and then still have large deductibles. There's a sector of people who look at this who say that insurance companies spend too long debating whether to authorize coverage to doctors or medical professionals who would say that. So there's just a huge pent-up frustration about the healthcare industry in the United States, and I think a lot of that is coming around to focus on this case and this shooting in particular.
OK, Bloomberg's Bill Ferry's on those developments. Dramatic pictures, of course, out of Pennsylvania. We appreciate the update in the context, of course, Bill. Thank you. You can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, terminal subscribers can go to DAYB Go on the terminal. Now, traders have their eye on global central bank decisions this week, with the ECB, of course, taking centre stage on Thursday. To kick off a bumper few days of meetings, we've heard from the Reserve Bank of Australia, which held rates at 4.35%, as expected. Let's bring in Bloomberg's Valerie Teitel to break this down for us. Valerie, what was the message then out of that decision from the RBA?
The message that the market took from their press conference and their statement that they released is that it was a dovish decision. Yes, they did hold rates at a 13-year high, Tom, but they slightly hinted that there could be a rate cut coming in the near future. They mentioned some downside risks to growth and also stressed that they're gaining more confidence when it comes to the trajectory of inflation. We saw the Aussie sink, the biggest mover in the FX space, sinking some 0.7%. Also a rally in the front end of the Australian yield curve with that 3-year yield down 8 basis points. If you flip on and just take a broad look at where the RBA stands, they have yet to begin their rate cutting cycle, but perhaps it would be until February where they would begin it. The market is pricing a 70% chance that we do get an RBA rate cut in February, but the first full rate cut isn't priced until May. But Tom, this dovish tilt from the RBA might foreshadow what we hear from other central banks who are meeting this week. If we flip on, we are hearing from the Bank of Canada tomorrow. They're expected to go up for a back-to-back 50 basis point rate cut after an unexpected rise in their unemployment rate on Friday. Then on Thursday, to round it out here in Europe, we hear from the SNB in Switzerland and from the ECB. The risk to both is that they intend to send a dovish message. It wasn't too long ago we heard from an SNB governor that negative rates are still in their toolbox. And with the ECB, we also get their updated growth and inflation forecast alongside their rate decision. The risk is for the market that they tend to make a dovish statement with both.
Okay, the doves in the ascendancy, at least amongst these central banks, as we look ahead to the Bank of Canada, ECB on Thursday, of course, and then the Fed later this month. We'll see if the tune changes for the Federal Reserve. And we get the inflation data out of the US, of course, tomorrow. Valerie Teitel, our markets reporter, of course, with the details. Thank you. Coming up, the rebel group that toppled Bashar al-Assad looks set to form a transitional government in Syria. We will bring you the latest on that story, of course, as it continues to unfold. And stay with us for live coverage of Bloomberg's Women, Money and Power event, convening the most influential female voices in finance from around the world to discuss consequential themes facing the future of business. Stay with us. This is Bloomberg. Welcome back. Now, Syrian television is reporting the rebel group that toppled President Bashar al-Assad has begun forming a transitional government. It's being led by Mohammed al-Bashir, the head of a quasi-government in Idlib set up in 2017 by the Islamist group HTS. Let's get more from Bloomberg Horizon's Middle East and Africa anchor, Jumana Basechi. Jumana, what does this signal about the plans of this rebel group in terms of their control going forward of Syria?
Well, Tom, I would say that it is the first case or incident of government formation that we're trying to get, or they're trying to achieve out of Syria here. The appointment of Mohammed al-Bashir tells you that they are trying to avoid a situation of complete chaos, given the vacuum, the big vacuum that the fall of Bashar al-Assad is leaving in Syria. What we know about Mohammed al-Bashir is he is obviously a member of Hayat Tahrir Sham, that is the major rebel group that made all these gains and were responsible for the fall of the Assad regime in Damascus. He had previously headed up the government that had been set up in 2017 in a province called Idlib. That was a quasi-government, not internationally recognized, but does speak to perhaps a little amount of governing experience that he does have. He's an engineer by training. But then also the Syrian state media reporting that this conversation actually took place between Mohammed Bashir and the existing prime minister. It tells you that, again, they are trying to keep this transition of power between the former prime minister and the new transitional prime minister as peaceful as possible. Now, the other question remains as to whether other rebel groups within Syria can sort of coalesce around this new government, given all of their competing backgrounds and how they have competed for different provinces and areas within Syria. And the other question still stands, which is that HTS is actually designated as a terrorist organization by the US and other countries around the world. The leader, Mohammed al-Julani, has tried to downplay some of their more radical tendencies and is trying to present a more moderate force that can actually govern and preserve minorities' interests. But we will see in coming days how all of this plays out, what effective governance actually looks like. And again, the big question is whether the broader Syrian public actually will have faith in these new institutions.
OK, and that then is the domestic focus. And of course, the domestic focus is rippling across the region. Of course, neighbours of Syria still reacting and adjusting to the developments on the ground there. How is Israel adjusting to what they are seeing in Syria?
Well, several actual major developments in the last couple of days. The first is that, as we were reporting yesterday, Israel started to move into this demilitarized buffer zone in the Golan Heights. And typically that was sort of a no man's land where neither the Syrian army nor the Israeli army could operate. They started moving into that part of the territory. In addition to that, overnight, there have been several massive airstrikes on military facilities dotted around Syria, 250 airstrikes. In fact, the Israeli army radio are saying that this is one of the biggest airstrikes that the Israeli army have ever conducted. And what they're trying to do here is to neutralize these chemical weapons warehouses, other surface-to-air missile launchers, airports, any real military facilities that they think the new leadership could get their hands on. Because according to the words of the Israeli defense minister, he sees this group, this HTS group, as a radical group, as an extremist group, and therefore, from their perspective, they don't want to see those key strategic infrastructure within Syria falling into the wrong hands. Now, I should say this has prompted a sharp rebuke from nations in the Middle East. Saudi Arabia have put out a comment saying that the actions of Syria are actually impeding on international law. Egypt as well, sending out some very harsh words this morning, saying that this is essentially, in a quote, an occupation of Syrian land and a severe breach of the 1974 armistice deal, which took care of that Golan Heights demilitarized buffer zone that I've been talking about. So yes, a lot of developments on that front, and certainly many players in the region are watching to see what happens from here.
Well, Jemana, from Israel to Iran then, another major player, of course, with very, very different intentions and aspirations in this region. How is Iran reacting to one of their key allies falling so quickly? Is there an Iranian response that we should be watching?
Well, the Iranian response has been quite timid. They have said that they're watching the developments very closely, and like other countries around the Middle East, are hoping for a smooth transition. Now, that is the rhetoric, of course, but in reality, what we're seeing is forces are being withdrawn. There are reports of many Iranian militia-type operatives actually withdrawing back from Syria towards Iraq and eventually back to Iran again. And I think the fact that the Assad regime fell so quickly is representative of the fact that Iran is actually on the back foot, and not just Iran as the government itself, but also its proxies in the region, the so-called axis of resistance. And Syria had traditionally operated as somewhat of a corridor for the passageway of arms from Iran all the way to Hezbollah, which was operating within Lebanon. One of the key objectives now from the international community is to ensure that that passage of arms doesn't continue now that there is this potential vacuum in Syria. And I think a lot of discussions are going on behind the scenes to ensure that there actually is going to be a functioning government, to ensure that there's no chaos and the gap doesn't get filled up by extremist groups who ultimately could continue the passageway of that Iranian axis of resistance. And remember, Tom, one final thing is the ceasefire between Israel and Hezbollah is still holding. It is perhaps no coincidence that the rebel forces begun their offensive into Damascus the same day that ceasefire was signed.
OK, Bloomberg's Jemana Besetchi drawing the linkages for us across this region as, of course, that area continues, the Middle East continues to adjust to what is happening, of course, in Syria. And we watch the developments in terms of their new government, interim government in place in Damascus. Coming up later in the programme, rebuilding trust, why the UK's Chancellor is pushing for stronger EU ties, with talks set to start next year. More on that story next. This is Bloomberg. Now to some other stories making the news this Tuesday. A South Korean newspaper says the ruling People Power Party will unveil a roadmap for the, quote, orderly exit of the president. Yoon Suk-yeol has been banned from travelling overseas while he is being investigated over his chaotic declaration of martial law. The main opposition party says the parliament intends to pass a new budget today to help clear uncertainty. China has opened an investigation into Nvidia over suspicions that the US chip maker broke anti-monopoly laws around a 2020 deal. Beijing had given approval for the deal 4 years ago on condition that Nvidia did not discriminate against Chinese companies. The move is being seen as Beijing's latest response to escalating US tech curbs. Coming up, Abu Dhabi has been called the capital of private capital. We are live on the ground to discuss the Emirates' allure for global firms. That is next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Chinese stocks rally, leading gains in Asia after Beijing's leadership makes its strongest pledge in years to boost economic growth. Exports from China surge ahead of new tariffs from the Trump administration. Police charge Luigi Mangione with murder for the fatal shooting of UnitedHealth executive Brian Thompson, the 26-year-old, arrested in Pennsylvania after a 5-day manhunt. The Syrian rebel group that toppled President Bashar al-Assad is reported to be forming a transitional government. Israel, meanwhile, stepping up attacks on military sites in Syria. Plus, we will be live at the inaugural Bloomberg Women, Money and Power event today, speaking to the most influential female voices in finance from around the world. Let's check into markets right now. European futures a little softer, looking to snap, it seems, 8 straight days of gains. Yes, the China story is in focus. The verbiage coming through from the leadership in Beijing, some of the most robust in terms of their determination to support that economy that we have seen in years. But the gains for Chinese markets ebbing and pairing slightly. Maybe profit taking, maybe now on hold and on wait until you see more details about how they plan to implement those policies. European futures then pointing lower by 0.4%. FTSE 100 futures currently lower by around 34 points. S&P futures essentially flat. Nasdaq 100 futures looking lower by about 19 points, pointing lower by 0.1%. That after the Nasdaq 100 fell around 0.8 yesterday. Let's flip the board and look cross asset. You do have a bit of money going in to the Treasury markets. Yields are currently down on the benchmark 10-year by 1 basis point, yielding you 4.18. Euro dollar at 1.05. The currency up 0.1%, the single currency. We look ahead to the ECB's meeting and decision, of course, on Thursday. 71.82 on Brent, down 0.4%. And gold gaining on the news that gold has been snapped up by the Chinese central bank back to buying, currently up 0.3%. Now, we are live on day 2 of the Abu Dhabi Finance Week, where the Emirate is looking to position itself as an emerging hub for global investment. Joining me now is Bloomberg Horizons Middle East and Africa anchor Jumana Basecci with a guest. Jumana.
Yeah, great. Thank you, Tom. So many fascinating conversations that we're having here on the sidelines of Abu Dhabi Finance Week. I'm happy to say that joining me right now is Andrea Bonomi, chairman of Investindustrial. And you are announcing that you're opening up your Abu Dhabi offices today. Why is a predominantly European-based private equity firm bringing its sights to the Middle East?
Because the main market for our companies, which are, if you want, leading companies, is the United States, but the main growth market is Middle East and Asia. So everything's shifting, a lot is shifting this way.
What are the opportunities you see here specifically? Which sectors are exciting?
Well, certainly for luxury. Luxury has already been here for quite a number of years, whether it's furniture, B&B Italia, Floss, Zegna, Tom Brown, Tom Ford, and the Ducatis, if you want, etc. So luxury was the first one, but now food, machinery, bottle caps we make here, we buy aluminium from here. It's becoming a real large market.
Yeah, one of the companies that I'm interested in personally, because I quite like their products, is Italy. And I know that you've been responsible for their expansion in and around the region. Where do you see going? What is the ultimate vision there with Italy?
Absolutely. For Italy, right now the biggest market is in the United States, but the biggest growth market is here. So there are 9 Italys. We just opened a few weeks ago here in Rim Mall in Abu Dhabi. There are 4 in South Korea, there are 4 in Japan, we are about to open in China. It's going to be a major market. The Middle East and Asia is no longer a market for, fundraising. It's a market for investing.
Yeah, and that's the comment that I keep hearing from so many investors that are coming here, like you, looking for actual opportunities to invest capital, not just fundraise. Let me ask you a question, though. More broadly speaking, it's been a challenging environment for exits. Are you getting pressure from your LPs to monetize some of the investments?
The private equity industry is a cyclical industry. And yes, there is pressure for LPs for monetization. In our case, we are fortunate that we are, if you want, capital rich in the sense that the timing was very good, very good for us. So we are on the deployment phase, and it's a very good time for deployment.
Yeah.
Exits in 2024 are not strong in the industry, but 25 and 26 will be very strong.
Why do you think they're going to be strong?
Because it's always the pressure from investors and the liquidity on the market. It's a cycle. It has happened time and time again. It happened in 2000. It happened in 2008. It happens all the time, and it's always have the same situation. And it eliminates, unfortunately, about 20 to 30% of the private equity houses who are either wrong-footed, etc., and the leaders become stronger. It's very important to keep the momentum through this the fundraising and the deployment momentum.
I speak to many American executives, and they're really excited about the prospect of capital markets activity picking up next year, deal making, M&A, again, more IPOs, exits. How is that going to trickle down to the broader ecosystem?
It's what brings the liquidity. The big advantage of private equity, the big change the big contribution private equity brought to the economy is liquidity. Liquidity for companies and firms that are very active, and it's key.
One of the companies in your portfolio is Xenia, luxury name, and you brought that to the market via SPACs a couple of years ago when SPACs were the thing. Sort of died down there. Do you ever see, is there potential for SPACs to come back again, or is that just a fad?
No, it's a niche business. So SPACs will remain a niche, a much smaller niche than before, done by professional groups. Our SPAC was the biggest US SPAC aimed at Europe, and it's been very successful with Xenia.
Yeah.
And it was within the private equity operation, so it wasn't a one-off. It was targeting exactly the Xenia type of companies.
Yeah.
And Xenia is very happy, and I'm going to talk about it later over here.
Okay.
Xenia is very happy in New York. So
good. Well, I'll watch out for that panel. We've spoken about the Middle East market, the potentials there, US obviously, but I need to ask you about your home market. Europe just feels like it's in the doldrums growth-wise. Everyone you speak to, the sentiment is really negative. Growth numbers are really low, really subdued. How is that trickling down to your business and the opportunities that you see right now?
So Europe is getting what Italy used to be, where you wanted to invest in Italians and not in Italy. Now Italy is actually, in Europe, is probably the best place, the most stable, the most logical, etc. So when you invest in Europe, it's an investment opportunity. When things are slow, you can buy well. But you need to concentrate on companies which have a lot of white space.
Do you see those companies, though? Do you see those exciting companies coming up with new ideas, with innovation coming out of Europe right now?
Absolutely. There's a lot of excitement at the company level, in specific company level, but I wouldn't say at the government level, if you want. If you look at the whole of Europe, that you don't want to invest in Europe. You want to invest in specific European companies, and that works very, 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 very well.
Is it overregulated?
It is overregulated, Europe. I mean, we need to start, if you look at the other countries, deregulation is now a trend, and we need to bring this to Europe. It's very, very important. It's otherwise you're going to have delocalization of companies, and that's because there's a lot of capabilities in Europe.
Yeah, I don't want to let you go before also asking about China, because you and I were speaking off air about some of your expansion plans there. So tell us what you see as the opportunity in China. Many companies are actually pulling back from China.
Yeah, exactly. We're a little bit contrary on China. All the companies keep investing in China. It's going to remain. It will remain a part of the turnover of leading companies. You cannot move away from China. You cannot give up on China. Obviously, it's not the China it was a few years ago, but these things are cyclical.
Yeah.
People are slightly too much. Now all the private equity firms are India. These pendulums swing too much one side and too much the other side all the time.
Yeah, well, sometimes it pays to be moderate. Thank you so much.
It does.
Andrea Bonomi, Chairman of Investindustrial, thank you so much for speaking to us.
Thank you.
Tom, I'll toss it back to you.
Yeah, really interesting interviews, really interesting lines on Europe, on exits, and a view there on China. Bloomberg's Jemana Pasechi in Abu Dhabi with that interview. Thank you very much indeed, on the ground for us. Now, remaining with a focus on what's happening with the EU and the growth prospects there, because the UK and European Union are set to start formal talks on a reset of their relationship next year. Britain's Chancellor of the Exchequer, Rachel Reeves, says she wanted to deepen economic ties with the bloc to boost growth.
I did not come here today to start a negotiation or to lay down a set of demands. Those conversations about the reset and those negotiations will begin in the new year. But what I was aiming to do today was to begin to rebuild those bonds of trust that have been fractured.
OK, let's get more with Bloomberg's Oliver Crook, who's been following all of this for us. Ollie, a little strange on one level, the UK going there, Chancellor of the Exchequer going there, saying we want stronger ties with the EU. Then when quizzed about what those ties might look like, kind of pulling back and saying, hang on, that's not for the conversation for today. What did you take of this attempt for the UK and EU maybe to forge closer ties?
Yeah, Tom, I think you hit the nail on the head and really sort of expressed the sentiment that many of us sitting in that room and trying to ask her questions about what this relationship would ultimately look like really felt yesterday. I mean, we should say that there is sort of a significance in the signal, right? This is the first time a UK Chancellor of the Exchequer has attended these meetings since Brexit. This is a point that she made fairly often. But the question is, concretely, what does this relationship look like going forward? As you say, she wanted to boost sort of trade relationships. I think that trade is the #1 priority for the United Kingdom. Post-Brexit, perhaps not shockingly, but also seeing some possible progress that could be made on defense, some defense accords, and of course a sort of broader question of competitiveness within Europe. What is interesting, though, listening to her talk, and this is perhaps from my time spent in the UK covering Brexit, you hear so clearly how guarded and how sort of guarded her language is around not wanting to give any fodder to the sort of the right to the Tories within the United Kingdom. So everything comes with a sort of footnote and this, that, and the other. And yes, we want to make closer ties, but we don't want to give up sovereignty. And that is really the substance of the issue here, right? Because if in order to take something from the EU, you need to give something back. And at the end of the day, most of the European ministers there were quite positive about the UK being present. Some of them, however, Tom, I would say I could detect a note of really being unwilling to really budge a whole lot. So really the devil is going to be in the details. But as I said, the details will not emerge apparently until at least next year.
Yeah, symbolism can only get you so far, can't it? Up to a point. Talk to us about the deal-making that's been going on, of course, between the EU. A major deal, the Mercosur deal. It's been years in the making. They're kind of getting much closer to formally and finally settling that deal with Latin America. What do we know about the contours of that deal? Whether anything can stand in its way at this point?
Yeah, so listen, Tom, this is really interesting. This is kind of one of these huge stories that's been in the background for about 25 years. It's like the Capital Markets Union in Europe. We're told it's the most important thing. We really don't expect anything to happen. And then suddenly on Friday, we had this deal signed between the EU, Ursula von der Leyen, and the Mercosur countries, Argentina, Brazil, Bolivia, Paraguay, and Uruguay. This is a huge trading deal. This is a deal that would cover 780 million people. This is the biggest trading deal that the EU or those countries in Mercosur have ever signed. This could have absolutely very large economic ramifications. And there are many countries within the EU that are very happy to have this happen, particularly the Germans. I sat down with the German finance minister just on Friday, and he told me this about the deal.
It is part of this strategy of de-risking from China and diversifying. So from a geopolitical perspective, it would be hugely important to send this signal of cooperation to the Mercosur countries.
And so, Tom, there's a geopolitical dimension to this, obviously sort of opening up trade relationships. Germany very focused because of the sort of deterioration of the Chinese economy, but also Donald Trump coming into office. If they slap tariffs, if you have a greater number of countries you can trade with, then that insulates you that to a certain degree. The problem is there's a lot of concern around the agricultural sector. The French have objected to this. In order to block this deal is still blockable. All you need is 4 EU countries that account for 35% of the EU population. France will vote against it. The real question, Tom, and this will really stand or fall by Italy. Where Italy goes on this, I'll be speaking a little bit later to the Polish and the Dutch finance ministers. Both of these countries have stood against this to see if there's anything that they can do to make guarantees in order to not get basically the European market flooded with much cheaper agriculture from South America, which is really the main concern for the objectors.
OK, so we watch for the views more closely of Italy then as we look at the potential prospects for this crucial deal. At least some would characterise it as crucial for the EU. Bloomberg's Oliver Crook on the ground for us with the details on both those fronts. Thank you. Coming up, we will be heading to Bloomberg's Women, Money and Power event in London. Up next, our exclusive interview with Citigroup's Jane Fraser on her 5-year turnaround plan. Stay tuned for that. This is Bloomberg. Welcome back. Citigroup CEO Jane Fraser is entering the final stages of her efforts to simplify and streamline the American bank. But investors remain tepid, with the stock lagging behind peers and analysts predicting she will miss her 2026 profitability goal. Fraser spoke exclusively to Bloomberg's Shonali Basak.
My ambition is to be a high-returning, high-quality earnings, modern, simpler institution that continues to play a shaping role in the global financial system. We're truly privileged to be in as many locations as we are, with a talent base with such a global mindset and an ambition about it. So I think about, we've got the right strategy and vision, we're executing with the right organization, we've got making sure we've got the right talent and culture in the firm, and that we're a simpler, well-controlled, modern organization. We'll have got the job done.
If you could give yourself a grade on the restructuring plan, what would you give yourself?
We aren't done yet, so I can't give ourselves a grade yet. I've always said that this is a multi-year journey. We're going to be very disciplined about making sure that we don't take shortcuts. And the problem with grading yourself along the way is it becomes too tempting to do a quarter by quarter grade, as opposed to we're just very, very focused and accountable for delivering what the end product looks like.
Speaking of the end product, you've set out a goal to bring returns on tangible common equity closer to 11 to 12%.
In the medium term and beyond after.
So Bloomberg consensus this year has Citigroup's return on tangible common equity at 6.8%. What do you say to critics that feel like you're not getting there fast enough?
We have undertaken a multi-year major transformation of an institution. We are working with ambition, with accountability, and with urgency. So we've already divested all but one of our international consumer franchises and wound down those that we couldn't. We've undertaken a massive reorganization of a company of 240,000 employees in 6 months, such that 50,000 people have a different manager than had 6 months ago. Now, it's been major change. We're being bold, we're ambitious, we're holding ourselves very much to account to deliver on the outcomes we should do. And I say, look at the proof. We're delivering, and we're determined to keep on doing so.
Okay, our interview with Citigroup CEO Jane Fraser ahead of Bloomberg's Women, Money and Power event today in London. Let's bring in Bloomberg's Kriti Gupta, who is at the event for us. Kriti, let's start on Citi, Jane Fraser's transformation of that business. Walk us through what we have seen across Citi since that restructuring started.
Well, of course, you have seen it most evident, I think, in the price-to-book ratio. Tom, this is where Citi was really lagging. This was the kind of task that Jane Fraser had to really take on, this idea that she really had to take this bank and have it catch up to some of their American peers, not to mention their international ones. And that's where the transformation that Sonali was referencing in that interview really, really matters. Simply this idea that, of course, you did have Citi become a much more international business, for example, leading some of their international peers and even having a bigger presence than some of their American peers in international markets. That had been historically one of their Achilles heels. They've really tightened their approach on that, not to mention their wealth management story. Tom, if you need a metric of success, the price to book ratio is the first place to go, because that's where you saw Citi's kind of demise or Citi's lag as most apparent. Now that catching up still has a little ways to go, but has certainly improved when it comes to Citi's transformation. And Jane Fraser, of course, at the helm of that.
And talk us more broadly through the relationship, the transformation we're seeing in terms of private markets and relationship with banks, Kriti. I know something that you scrutinise pretty closely.
It's a completely different world where private markets are a much bigger part of the conversation than they were, say, 10 years ago. And a lot of this has to do with the roles that the banks play, the likes of Jane Fraser and her peers, in terms of how these deals are actually made. Because post-GFC, it was a lot of the banks that did this financing. Now, in 2024, likely going into the next couple of years as well, it's your bigger private equity players where banks have a bigger role in terms of that financing. But Tom, this comes right on the heels of headlines just a couple of days ago that the likes of Apollo, for example, are joining the S&P 500. So those who are directly exposed to the public markets are now going to have exposure to the private markets as well. Here in Europe, the infrastructure story is the juiciest part. It's where most people get returns when they're trying to navigate a fairly geopolitical world. I'm going to connect this all to the event that we are at today, the Women, Money and Power event, Bloomberg's very first, where we're going to speak to the women who are making some of this decision making. Jane Fraser was just a taste of the all-star lineup that we have at this event. Some of the panelists include the likes of Robin Grew, for example, over at Man Group, Anna Botín over at Santander, Jenny Johnson over at Franklin Templeton. These are the women really kind of powering the charge in terms of that transformation that I'm talking about. Not to mention, in the next hour, Opening Trade is anchoring live from here at the Women Money Empowerment. We have our own taste of some of the C-suite and some of the top players in the private capital market. So we're very excited to bring those conversations to you right here on Bloomberg.
Yeah, a fantastic event. We will be, of course, bringing you all those key interviews. Bloomberg's Kriti Gupta on the ground for us at that event, and we'll stay tuned, of course, for some of those key interviews across programming today. There's plenty more coming up. Stay with us. This is Bloomberg. Happy Tuesday. Let's check in on the equity performance over in China. Some of the gains have been paired. Some profit taking, maybe some expectation from investors that they want to see this new policy implemented. But make no doubt about it, the language that we have heard from the Politburo is some of those substantial we have seen in terms of the shift in language and emphasis for years, arguably since the 2008-2009 great financial crisis. The big question is if they match that rhetoric and language shift with actual concrete policy, and do they implement next year? But if they do, along the lines of the language we've heard today, then it will be significant. Do they expand the deficit, the debt to GDP target from 3% that's been set all the way back to the 1990s to 4%? That could be consequential as well. Increasing the number of economists think that will happen next year. The language, the focus on moderately loose strategy for monetary policy, more proactive fiscal, and here's what's really important, forcefully lifting consumption. So just moderate and focus in on that. As those gains, of course, in the Chinese market moderate, the language and the shift is pivotal. Will it be matched up and paired with action next year? Let's flip the board and have a look at what's happening in terms of expectations around inflation. We will get to that, but the inflation data out of the US on Wednesday is a data point to scrutinise, given that markets now expect a more than 80% chance the Fed will go again. Headline number expected to tick up to 2.7%, but on an annualised rate, 3%, 3 times markets, 3 months and 6 months on an annualised basis, you're actually looking at inflation starting to tick up. So does that challenge the narrative that the Fed has space to go again? That data is out tomorrow. There's plenty more coming up, including, of course, all those interviews from the inaugural Women, Money and Power event. This is Bloomberg.